So basically, my name is Hannah. I'm originally from DRC, Congo. You can hear my French accent, I suspect. I'm based in Cape Town here, and I've been investing in Africa for the past 7 years of my life, mainly on the private equity side with deals above 15 million euros. But I think in the past 3 years, I started to grow frustrated by the lack of diversity that I was seeing in the management teams that I was assessing. And then in my own personal capacity, I decided to try to become an active angel investor to try to finance and groom the next wave of entrepreneurs. So I think it's quite relevant for you guys today because I have this sort of investment experience both in corporates and in startup. So without further ado, I think the picture that we can have from the market is a bit negative from a certain perspective. Obviously, COVID and the economic crisis that has resulted from, the pandemic has had a negative impact on the operating environment of a lot of startups here in Africa, especially in sub-Saharan Africa. As you know, and as you can imagine, sub-Saharan Africa has been subjected to lockdown restrictions, border closures, and a lot of new regulations that have led some, businesses and startups to close their doors for a few months. Obviously, there has been a massive disruption in the sales, in the supply chain, the cost, in the financing tools that were available for entrepreneurs. And I think one of the most important points that I've noticed in the market, like a lot of entrepreneurs have been negatively impacted from a mental health and physical health perspective. So I just want to remind you guys as an entrepreneur, it's really important to take care of your mindset and your body because this is what you need to perform well as an entrepreneur. Obviously, the impact of COVID has been more or less negative depending on few factors, depending on the country you are in, depending on your business model, the industry in which you operate, the distribution channels you were using. But all of that, I think, has still impacted the early stage investments, and that has led to some changes when it comes to the ability of entrepreneurs to fundraise, and also from an investor perspective to our ability to source due diligence and structure transaction. So moving on, I always like to be constructive and positive and look at the opportunities and the upside in any kind of scenarios. So I think the recommendation that I would give to entrepreneurs based on my experience in the early stage investments this year in Africa is that it's very helpful if you can focus on your existing relationships. And by existing relationships, I mean your existing customer, your existing suppliers, the existing potential investors that you know, because in a world where, physical interactions are limited, it's always easier to convince someone to buy your product, your service, or convince someone to invest in your business if you knew the person before. I also think that entrepreneurs have to be very careful when it comes to interacting with investors. You want to make sure that you do your own due diligence on the investor. You want to make sure that you are pitching an investor whose mandate is actually in line with the purpose of your venture, because I think one of the impacts of the crisis is the following. A lot of investors are much more conservative in terms of what type of businesses and ventures they invest in. So investors like to back businesses that they know, that they understand well, that in industries that they understand. So as an entrepreneur, if you don't want to waste your time with potential investors that are not a good match, just make sure that you check few things on your side as well. If I'm moving back to the sort of operational aspect of the question of opportunities in a time of COVID for entrepreneurs, I think few ventures have managed to actually outperform during this time, and very often these ventures are delivering essential goods and services to their clients, so focusing on what a client needs and not what a client wants. I think a lot of clients, whether it's corporates or whether it's an individual, a lot of clients don't have the luxury to buy things that they don't really need. So it's really important for you as a venture to question your business model and question to which extent you are focusing on essential goods and services. Just to finish on a positive note, and what I've seen in Africa in the past few months, indeed, few sectors have been negatively hit. Obviously, hospitality, airlines, but then I think some sectors have outperformed during these challenging times, especially if you look at the edtech industries, the health tech industries, the fintech industry. In my own personal capacity as an angel investor, I have actually executed 3 transactions this year. So you have to remain optimistic as an entrepreneur this year. There are still investors out there that are investing capital in the right ventures. And I think you have to look at the opportunities and the upside in terms of COVID and the pandemic have probably accelerated the maturity of the African ecosystem from an investment and startup perspective, and have also, kind of generalize the use of tech as a tool to foster the economic growth on the continent. So now I'm going to be a little bit more sort of technical and pragmatic when it comes to my approach to what we've seen in the market in Africa in the past few months. I think that typically when it comes to pre-seed ventures and startups, valuation have been below $1 million, and very often investors will focus on the team, the product, and the business plan when it comes to assessing, the startups. When you move to the seed level, valuations have been roughly between $1 to $5 million. Obviously, the numbers that I'm giving are based on my own personal experience and that of some of my peers, but there are always exceptions, and people always have different views. But my understanding is that when you move to the C-level, people are definitely focusing much more on the revenues and the tangible traction you are able to get for your business. Moving on now to the second topic of deal structure, we've seen more and more investors moving towards safe and convertible agreements, so that the investor doesn't have to talk about valuation with the entrepreneur. And obviously there are different schools when it comes to investing, deal structuring, and valuation, but there are still few investors out there who continue to invest in equity or who are trying to use sort of blended finance instruments such as redeemable grants and revenue sharing loans. So it's always good as an entrepreneur to remain open to all these type of financing tools that can become more relevant for some investors. Last but not least, I think we've seen an increased trend in the market when it comes to the use of stage investments, meaning that if an investor wants to invest $1 million in a venture, he will not invest $1 million on day one, but he will, for instance, invest $500K today and say, I will invest the remaining $500K in 6 months' time, assuming that certain milestones are reached. And it's a way for an investor to de-risk the investment, and it's definitely something that entrepreneurs should probably consider to make sure that a deal happen. And then just to finish very quickly in terms of what kind of mindset investors have given the new operating environment. A lot of investors obviously have higher returns expectations, given that they consider that they are investing at a time where there is a lot of uncertainty in the market, a lot of risk. So as we say, higher risk, higher returns. I think investors are really focusing on a clear growth profile, a clear path to profitability, and understanding the working capital requirements of the venture. So as an entrepreneur, you want to make sure that you're focusing on that as well. And I think the last word that I want to share with you guys, it's a tough time, not only in Africa, but in the rest of the world, but this is your time as an entrepreneur. Remember, you are an entrepreneur, you know how to be flexible, agile, creative. You need to make sure that you continue to interact and connect with your team, all the stakeholders in your company, clients, suppliers. You need to make sure that you are realistic about the operational performance of your business, rework your budget and your forecast based on, the new normal, because I think that, you can't consider that, COVID will disappear overnight. And it sounds like this is the new normal, the new operating environment we all have to do business in. My personal motto is always to try to maximize your return regardless of the operating environment, and it's definitely something that you have to do today. So this was my last word for today. Thank you very much for listening. I hope these very short kind of presentation was informative, and I remain available for further questions. And thank you very much again, Christine, for hosting me today. This was my pleasure to be here and to share some of my experience as an angel investor in Africa.